Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for WealthPress. Today is Tuesday. It is the 4th of May. It is the first trading week of May. I don't know how we got here. I was actually thinking March. The year has gotten away from me. It's so true. The older you get, the faster time goes by, which is not a great thing, but here we are. We had manufacturing data yesterday. None of the reports came out. They were softer than expected, to be quite honest with you. Today we have international trades in goods and services. That's the big report today. The two big reports we have are the employment situation and jobless claims. I'm a little disappointed that the manufacturing data came out weaker than expected. I'm very curious how that's going to impact into the inflationary figures that the Fed has planned or has in mind. But in terms of the bond market, it didn't really react too much. It is flat. I think the bond market, as I said, as I predicted about 2 weeks ago, it's going to stay choppy for quite some time, maybe another month and a half, and then start coming back down. Expect the current trading range to be between the 138 and the 135 level, not too much of a trading range, which will keep the stock market in line as well, because the stock market gets its cues from the bond market, and if the bond market's not really doing much, the stock market's going to be stagnant as well. Currently, I want to show you this because it just isn't getting any better, and it's going to get worse before it gets better. But currently, as of right now, if you look at the S&P 500, folks, I do this now every few days. The momentum levels went down a little bit, but we're still at the highest momentum levels in 15 years. And I mean, we can huff, we can puff, but eventually this is turning lower. So I'm not that bullish on the stock market in the medium term. In the short term, I think we're still going to get some money coming in. But in terms of like the next few quarters, I think the market is going to start cooling off just a bit because these momentum levels can't stay. I mean, you currently have 93.5% of stocks in the S&P trading above the 200-day moving average. That's just too bullish right now. And when you look at the number of stocks trading above the 50-day moving average, you could see here, this is a shorter term indicator. It's curling as well. So I think we're peaking out in terms of momentum levels. So don't expect too much extended upside. You'll get a couple of points here and there, but that rubber band is really stretched out right now. Indices are going to open up down about Dow, about 100 points on the Dow, 70 points. On the NASDAQ, it's going to take a nice big dump, about 100 points lower, which is not too significant because the NASDAQ is at 13,500. But there's a good chance the NASDAQ is going to start rolling over just a bit. It is so overdue, it's ridiculous. And I'm expecting it to hit the 50-day moving average. Let me just take a look at a normal chart here. I'm expecting it to hit the 50-day moving average before bouncing again. And based on the current 50-day moving average, the S&P 500 momentum levels, and currently what we're seeing, that number is pretty significant. So do expect the market to come down and hit the 50-day line. So if you're thinking of initiating some short positions, this may be a good time to do that. And before we conclude, I'll give you guys a couple of interesting short positions to look at. Now, let's talk about global economy real quick here before we get ahead of ourselves. So earnings, they're still strong, really strong, a lot better than expected. Now, keep in mind, a lot of them have been beaten down and revised lower over last year, but they're still coming out better than expected, which is the best scenario right now. Oil prices are advancing. Saudi Aramco said Tuesday its profits soared 30% in the first quarter of the year compared to last year, riding the back of higher crude oil prices and recovering demand as major economies claw their way out of the recession. Crude oil jumped. It's at $65 a barrel right now. I'm not expecting too much upside for crude oil. Let me actually show you something, and I'll explain to you why I'm not expecting too much upside for crude oil. There's a very simple reason for it. Crude oil has not, see this green line? This is where we were last March, February, March, when we broke down for the COVID. We still haven't been able to take out that high. It's the only sector of the economy that hasn't. So as far as I'm concerned, there's still way too much demand for crude oil, and I'm not expecting anything major out of the crude oil market. I think this is as high as we can go, maybe another $5 a barrel, and then we're going to start dumping again. Trading was very thin in China and Japan. They're closed for holidays on Monday. Yesterday, Jerome Powell said the economy outlook has clearly brightened in the United States, but recovery remains uneven. Japan is screwed. Canada is screwed. India is in a really bad shape right now. It's going to be a bumpy road, but we are getting out of here. More than half of the companies in the S&P have reported, and their results are, it says growth of 54% so far, but I believe the numbers are actually even better than that. We're going to get news this week from Merck, Pepsi, Colgate, CVS, and the big report is going to be the jobless report on Friday and the unemployment report on Thursday. We've got the petroleum status report tomorrow. That's not going to be big. Keep your eye on the international trade in goods and services. That's coming out today. As I mentioned, manufacturing was just not that great. Now, let's talk about some stocks. I've got a couple of stocks pulling back, and right now you don't want to look for long trends. The markets are overbought, but short-term pullbacks are okay. They're not overextended. I like Boyd Gaming. I think a lot of money is going to be going into gaming stocks this summer. The stimulus, economy recovering, consumer discretionary spending is going to heat up. I've been promising it, and it's happening. I mean, retail sales were off the charts. GDP was looking good. Spending is looking good. Manufacturing is a little woozy, but I like this Boyd Gaming. I like this pullback. I like this pivot here. If it breaks above the 68 level, you buy it. I would hold it till about 73, 72. And if it breaks below 64.50, you dump it. That's the beautiful thing about these pullbacks. They have very low risk opportunity, low risk, high profit potential. You know if you're wrong pretty quickly. Next stock, AGCO. This is an agricultural stock. It's a farming stock. I gave you this stock right here when it was at 130. Now it went as high as 160, and now it's at 149, and I think it's going to come back up. I like this pullback. I would be buying above the 152 level, and I would put a stop loss at the 144 level. My profit target would be 2 times the difference between my entry and risk. Very, very simple way to trade pullbacks. And another asset that I like is the healthcare sector. This is one of the top 10 S&P 500 sectors. I like it. I like how it's pulling back, and also tech is overbought. And typically when tech cools off, healthcare comes up. We've noticed that over the last several times. So and healthcare is on its way up because a lot of Biden's money, a lot of the money he's going to be raising and putting out is going into the healthcare sector to help fight future COVID vaccines and all these other things that can hurt America and the world economy. So I like this pivot. I would be buying at the 123 level, a stop loss at the 120 level. I like this right now here. I like these 3 pullbacks. BYD, AGCO. Don't confuse this with ACGO. It's AGCO because ACGO is also a different stock. It's a different stock, AGCO and XLV. Now, before I take off, let me show you some pullbacks that I'm looking at here. Not pullbacks, excuse me, breakdowns that I'm looking at here. There's a couple I want to show you. Fastly breaking down, T-Doc breaking down, and I told you T-Doc was breaking down about a week ago. Peloton breaking down, I told you guys about that one too. Spotify breaking down. Do you think it's a coincidence that T-Doc, Peloton, and Spotify are breaking down? Those were the top 3 stocks last summer, right? VNet is breaking down. Splunk is breaking down. I told you guys about that about a week ago. Reggie is breaking down. Let's see here. Smartsheets is breaking down. Brookfield Renewable is about to break down, it looks like. Appian is breaking down. This MTLS is breaking down. And BTAI is breaking down. Now, here's what's interesting. I want you guys to pay attention to this. Notice that there's 30 stocks making 90-day breakdowns. That means 90-day lows. And 276 stocks making 90-day breakouts, breaking out higher. I want you to see this a week ago. Remember, 30 making breakdowns, 276 making breakouts. Let's go back 1 week. 276 stocks making breakouts, pretty much same number as right now, right? Let's go to today. Let's go again. I want to show you this. 276 and 30, right? Let's go back a week ago. 276, same number of stocks breaking higher, but only 3 stocks breaking down. Now there's 30 stocks breaking down. Look at that. So 3 stocks making 90-day lows, 30 stocks making 90-day lows. Momentum levels are catching up to us, folks. I'm not kidding. Momentum levels are catching up to us. The number of stocks trading above the 50-day moving average, it's starting to curl, and then it's going to go down, and that's going to give a pullback to the 50-day line, or even worse, in the S&P 500. So you got to keep your exposure lighter and keep attention and focus on pullbacks and breakdowns right now. There's a lot of cool breakdowns happening. Now, folks, there's a few things going on in the market that we need to highlight, just as I've been doing here. People have more money right now than ever before, ever before, because of the recent round of stimulus money. I've checked the U.S. banking accounts, how much money is being deposited into banking accounts. And I'm not kidding, more money than ever is going into people's bank accounts. And recent earnings reports have proven that people are spending their money like there's no tomorrow. I mean, look at consumer spending in retail. It's off the charts. If the current earnings season continues to surprise, we could be looking at a redefined path for markets in 2021. I'm not kidding. A fully redefined path for the second half of 2021. On that path, we could see some massive moves, and traders can get in on the action with the next breakout stock before it takes off for the summer. I'm not kidding, folks. You got to get in on these moves. Some of these moves are up 30 points, 100 points. I've had some stocks go up double. I'm not kidding, double. And the market has given us more upside since Biden has been elected, since almost any other president in the last 50 years. Are you ready to learn how to use this strategy? I sure hope so. Because, folks, it's going to be a breakout stock summer or a breakdown stock summer. Click on the link below to get more information about the next breakout stock. Do it now. Folks, you don't want to miss this. Traders are getting in on the action, and they want their breakout stocks. And I'm going to give you guys the best low-risk breakout plays on the best stocks. You got to check this out. You really do. Are you ready to learn the strategy? Follow the link below. Get in on it now. And make sure to like this video. Subscribe to this channel if you're watching on YouTube. And folks, stay ahead of the market by being the first to be notified when we post new videos. And have an amazing day. Talk to you guys later. Bye.